Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful Wednesday so far. Today we're going to be diving into our daily cryptocurrency market update, and it is indeed a big day today, as it is the day the Fed are coming together and meeting in regards to monetary policy, where they're going to be setting rates and really setting the pace moving into the future. This is going to be a big day for markets across the board because we know that we've got the Fed threatening to tighten in terms of monetary policy, up interest rates, reduce the balance sheet, and so on and so forth. If they stick to that course as hawkishly as they've came out and now been, that's detrimental for markets across the board, and natural fact is going to see, in my opinion, markets continue to slide. And that's our overall bias at the moment. We think there's more downside for not just the cryptocurrency markets, but markets across the board. And we did actually say in yesterday's video, we wouldn't be surprised if we saw a bit of an uptick leading into this. And this is, of course, the Fed is expecting to raise rates by a half point. Investors wonder if it will get more aggressive. And there's a lot of talk. If the Fed are upping interest rates by 0.5%, there's a lot of talk about them doing it by 75% next time, and then maybe even a point. And that's significant. That's, going to be, in my opinion, quite catastrophic for markets generally. Mix that in with a slowing down economy, high inflation, it spells for a bit of a sticky patch moving forward. And the Fed at this point, I literally think, and we made a video saying that Jerome is the new 007, he kind of has a license to kill markets given their monetary policy. And there's also something going on with the sort of bond market where the Fed can't step in like they previously have been able to kind of save it. So there's lots of risk on the table right now is the main takeaway from all of this. And this, I think, is going to weigh very heavily on the cryptocurrency market shoulders. And the crypto market's actually doing quite well running into the FOMC meeting. But the problem that I've got, I'm watching these markets. I'm actively trading them. You guys know I have shorts on a number of altcoins. The problem that I've got with the current move that we're making, and we'll drop down what we're going to do is take the logarithmic bands off for now. The move that we're making, I actually think, is very, very trader driven. I think you always get people that kind of FOMO into the markets on any kind of a green start to the day. But I think this is extremely trader driven. I think you've got traders this is a trader market in my opinion. And you've got traders that have long this. You've got quite a few short squeezes that have actually took place, and traders have got on the back end of that, mixed with a little bit of FOMO. The problem that I've got is that isn't sustainable, because the second that we see weakness at the other end of this rally, what do you think those same traders that are propping it up to the upside are going to do? They're going to flip short and they're going to trade it back down. And that's my concern at the moment on the short term, is that this fizzles. This doesn't, at the moment it's showing quite a lot of strength, but when you look at why it's doing what it's doing, it's not really what you want to see. We're not seeing huge inflows of institutions. In actual fact, we've seen the opposite generally, and we're going to talk about a bit of news, such as the fact that Bitcoin funds saw the largest single week of outflows since June 2021. And this is a general consensus. We're also going to talk about a little bit of the news. So we've already got into it, guys. Like I say, the overall market is somewhat up. It's not really a strong up. We did say that it was quite likely that you may get a rally into the FOMC. Macro picture or sort of bigger term time frame, in the short term, I think there's more downside. I think the course that the Fed's on is going to cause markets a lot more pain. You couple this chart here, you put your EMAs on, your 200 and your 50 on the 3-day, and you can see we're at this really tender, kind of vulnerable spot, if you will, at the moment for the cryptocurrency market. We've got this death cross that looks like it's impending, and we're also at the kind of halfway mark that has typically been broken with momentum in a downtrend on the long-term regression bands for Bitcoin. And when you couple that with the equity market, it doesn't look too strong. Let's bring up one here, which is the NASDAQ composite. Of course, we'll get off this. You can see the NASDAQ. In my opinion, this looks somewhat like a topping structure. And it's actually quite interesting. What are we trying to do here? It's actually quite interesting that this structure here, actually, you can see this on altcoins. You can see altcoins at the moment. For example, Luna may be a good one to show. Certainly on the short term, kind of has this kind of a topping structure, in my opinion, over here. And that's kind of another, if I think the equity market's going to go down, given the correlation, Bitcoin's going to follow. So we've spoken in great detail about all the reasons why we think this is likely. The pump that we're seeing at the moment, we did say it's very possible and actually plausible that there is a rally into the FOMC meeting, and that's what it looks like we're getting. The Federal Reserve is expecting to raise interest rates Wednesday for the second time since 2018, boosting the Fed fund target rate by a half a percentage point. The central bank is also expected to launch a program to reduce massive bond holdings by $95 billion a month starting in June. They're not going to get around to this, I don't think. How on earth are they, with the bond market in such a state that it is? You know, your yields are going through the roof because nobody wants the bonds, and the yields need to go up to make the bonds and the debt more attractive to buy. What, they're going to release $95 billion worth of bonds onto the market? They're going to sell that? I don't think so. The markets are braced for a hawkish Fed, but many investors are wondering if Fed Jerome Powell will signal that the central bank is willing to get even tougher with interest rate hikes. So if he comes out today and continues this hawkish theme that he's got, or theme's probably not the right word, then I think that sees further downside for markets. And that's why today's such an important day. I think it's around about 6 p.m. UTC time that we're actually going to get the data release, and then he'll do a conference, I think, half an hour after that. Well worth watching because it's going to be a market-moving event. And I think a lot of this rally, depending on how it goes and what's said, could get killed on the back end of that. You know, and it's, you know, like I say, my position at the moment is short. My overall position is long, my net spot position, but certainly I'm shorting a number of altcoins to the downside because I think that's what's going to happen. And that's only really to mitigate my long net position that I'm going to be holding for the next 5 years. And we can see the shorts and longs are actually relatively even across exchanges. You know, if you look at Binance, FTX, BitGet, you know, Bitfinex, all of these guys, you can see, even Kraken, you know, it's relatively even, some more to the short side than not. And there's been a lot of liquidations. There's actually been more long liquidations than there have short. I have no idea why people confidently put on anything over than 5x leverage longs in these markets. It just seems like complete, it seems very nihilistic. You know, it just doesn't seem like it's a very smart thing to do. You know, I am only, and very light leverage short, by the way. I think anything over 4% is somewhat gambling in the cryptocurrency market because it's not unheard of that within a 12-hour period we can see 20% moves for your altcoins. But this is all interesting data that you know, I like to kind of look at. Let's get into a bit of the news now, guys, as we've sort of been neglecting it because we've been going over so many technicals in these updates. Bitcoin funds saw largest outflows, largest single week of outflows since June 2021. It's difficult to... but basically what this is saying by CoinShares is that, and CoinShares is something that we've watched, they're typically how many of your institutions is likely to... you know, potentially buy and get exposure to crypto for a fund. And it's basically saying here that, you know, given the hawkish Fed, I think people are still wanting to take more risk off the table. And I think that's a theme that we're going to see continue. And again, back to the point we were making about how this pump is very trader driven. When that weakness starts to show, your traders that are they're biased. They don't care whether the market's bullish or bearish. Your proper traders, they just are here to extract money out of it. They'll switch bearish within and short it within an instant, guys. They don't have a bias to propping this market up. Unlike Michael Saylor, essentially saying that he reckons he can stop Bitcoin from going below 21k or 27k. Now, I don't think Bitcoin's going to get below that. That's not a target that I'm looking at. But I think it's rather arrogant that he thinks he can actually stop that from happening, and he probably has to stop that from happening because of his position in Bitcoin, and that may, you know, there's a huge debate right now, an argument. Well, when does Michael Saylor actually have to start liquidating? CoinShares Q1 earnings slides. Retail remains focused. Exec says until European institution investors show greater interest in crypto, CoinShares is going to double down on its retail strategy. So we're still seeing retail. Again, theme here, institutional investors are not showing great interest right now because they're risk off given what's going on with the Fed, linking it all back to the Fed and where we're currently at. And if I mean, you know, the volume just isn't even there at the moment. The volume's actually dropping off right now. And people are going, oh, yeah, you know, coming up with all sorts of excuses for why they should be bullish right now. And nobody's more bullish on crypto than me long term, guys. Short term, though, you know, it's a choppy time period, I think. Argentina's biggest private bank adds crypto trading. A new feature of Banco Galicia investment platform allows clients to buy Bitcoin, Ether, USDC, and XRP Ripple. That's quite huge news, actually, in regards to Ripple being able to be bought there. People really like Ripple, and I've held Ripple for years now. I've got a very love-hate relationship with it, and I think, you know, when you look at the facts, it's largely underperformed pretty much a lot of your major altcoins out there. Certainly, I know that for a fact as somebody that's held it for nearly 5 years. But this is what we're continuing to see, despite everything. Building adoption continues, and the price just reflects really market sentiment. And Algorand, of course, price is up 15%. It's down again now, I think, with a deal, with a FIFA deal. I like Algorand. I'm a big fan of the blockchain, as I'm sure many of you know. Coinbase took out the first Bitcoin-backed loan from Goldman Sachs. We spoke about the fact that how Goldman was actually giving Bitcoin-backed loans, and that was a huge step in the right direction. With crypto meeting the traditional financial world, we know it was to Coinbase, so of course they would have, I think, happily lent them the money, given the fact that they've got very good turnover. So that's all I really have for you in this video, guys. Food for thought, all of this. It's going to be a big day, whatever happens. You know, we're at a very tender spot for the cryptocurrency market, and that's all that, you know, I want people to know. I don't think this is leverage long or even high leverage short markets. I think this is just markets. Sometimes you've just got to sit and see how things play out and then assert your position accordingly. My overall net position is largely in crypto. We short it to minimize a little bit of that risk. But ultimately, you know, I'm here for the long run. I think this market's going to come out the other end of it and do just fine. You know, there is the other end of this when the Fed have to actually go back to printing and stimulating and so on and so forth. All I have for you in this video, guys. If you enjoyed the content, like, as always, appreciate it. So as a comment. I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.